What's up? What's up? What's going on, everybody? Johnny Lynum here, the military CEO. Wanted to just jump on and say happy Saturday and share some real estate investing news with you guys. Something I'm gonna start doing more often, jumping on at least once or twice a week, just touching on some of the news, what's going on in the real estate market, what's going on in our portfolio, what are we seeing in our markets that we're investing in specifically, and then and just sharing like updates from across my portfolio, some of my clients, some things that they're seeing, and yeah, just sharing that with you guys. Be sure to drop you got questions, share that in the chat, and we'll take a look. But one of the big things that stood out to me today, when I was going through reviewing the news that came out, the National Association of Realtors, they came out and they dropped some data, just the monthly real estate data nationwide. We all know real estate is local, 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 local. We got to focus on the local when we start looking at our area of responsibility or our buy box that we're looking to purchase real estate in, and just better understand what's going on in our market. So the National Association of Realtors came out. They said that existing home sales jumped 14.5% in February to adjusted rate of 4.58 million units sold. So for those that continue to kind of track the trends, we had just dipped a little bit below 4 million sales coming out of December, I think it was. And so now we spiked up and in February with over 14.5% jump increase in sales. What does that mean? That just means that, hey, there was more units sold, about 500,000 more houses sold in February. Just looking at the annual adjusted rate, which isn't the craziest jump when you think about it. We start looking at the spring season about to start. We went into the holidays. We had high interest rates. So there was a lot of pinned up demand. People had just stopped going through the holidays. Now kind of coming into the spring, and in February for its closed transactions, you had the rates that went up. They dipped a little bit, so it spiked in regards to a lot of mortgage applications that were completed, and now people closing on houses in February. So it went up, it jumped. But one of the things that stood out to me when you look at it, that overall, I think it's been a long time, but the median sales price, it actually went down 0.2%. To 363,000, which is well above the markets that we participate in, primarily across the state of Alabama, but then also Panama City, Florida, in the northwest panhandle of Florida, where we buy houses and, we renovate, we buy rental properties, we buy small apartment buildings, kind of 40, 50 units and below. And so one of the things that we've been seeing is, a lot of people on YouTube, you got the crash bros, everybody saying, oh, real estate's crashing, home builders are crashing. It's going to be 08 recession. No, people lying. They lying. The number's not saying it. The data's not saying it. It's not going to be an extreme crash like everybody's predicting. I'm sorry. And one of the things that you go look at, and I forgot one of the data points that I looked at and the source of it, but they went back, and I think it was Jay Scott. Shout out to Jay Scott. Jay Scott went back and looked, and I think it was like the last 112 years that the price of real estate, that it kept pace with the growth of inflation over time. And so if you look at it and think about it, what a lot of people are projecting is, one, that we got to get back in line with inflation. We know inflation spiked. And so that's either two ways. And one is prices are going to reset here within the next 12, 18 months, that you'll see a drop to get down probably 10% to get back in line with inflation. Or what a lot of people are saying is going to probably be the true, we can say what is going to actually play out is going to be that we're going to stall. You're going to see real estate prices kind of stay where they're at right now for the next 2, 3, 4 years until inflation catches up with the housing prices, and then everything's kind of going to get back in phase and continue to track inflation with the increase of house price. Because right now we all know housing, where everything is at with earnings for his employees and wages that everyone has, that it's not affordable. And so something has to give. Either wages have to catch up and we give time for wages to catch up and real estate kind of sits where it's at, or there's going to be a drop. And right now, with where we're seeing the supply numbers at, that I don't see it happening. And that was the third point that came out of that the National Association of Realtors, out of their article, was the number of unsold existing homes still sat at 980,000 homes on the market across the United States, which represents about not less than 2.6 months of inventory. We got to get more inventory. And I think that's the reason why we're not going to see prices fall, is because we don't have enough inventory. There's not enough supply to drive down prices. If we had more supply and demand took a shot, as we saw, demand has dropped, but the supply hasn't caught up yet. Why? Because the majority of Americans, to the tune of over 90%, have less than a 5% interest rate. And so homeowners that are looking to maybe sell their house and move up to a bigger house, they're not there right now. Nobody's selling. Nobody's looking forward to selling a house that they have a 3% interest rate on to go buy one with a 7% interest rate. I'm sorry, unless you just have to move, then no. But if you start looking at areas with growth, where jobs are coming in, more people are moving, they have a population growth. So if you start looking at markets like Texas, then also looking at Florida, then you see an influx of people still coming in and not a lot of inventory coming on the market. And so hence we have the back and forth right now that we have with the market, where is that prices aren't really dropping. People thought that, with interest rates going up, we were going to see a drastic pullback. The market was going to crash. We were going to see reductions in prices like '08. And it's just, I just don't see it happening just where we are right now, especially when you start looking at affordability and the lack thereof across the United States. But more specifically, when you start looking at the median sales price in the markets, that first-time home buyers, there's not a lot of options out there, because the last few years, builders have been building move-up homes, so homes 3,000 and plus square feet, and luxury homes, just because interest rates were low, money was cheap, and people were buying. And so that's what we have right now, that there hasn't been an emphasis on the first-time home buyers. So there's not a lot of inventory, because when you look around different markets, that people are literally still going into bidding wars in some markets right now on affordable housing, because guess what? There's not enough of it to go around, and there's an oversupply of not supply. There's a over pent up demand that's been out there for a while looking for those homes. And so when interest rates trickle down, with everything that's been going on with the Fed, with them just raising another quarter point, and with the bank failures that happened and the bailouts that happened, yes, I believe they were bailouts, that we're going to see interest rates drop. And I think that's going to drive more demand as those rates go down. We saw that spike when rates dipped around 6% a couple of months ago, and boom, everybody started buying again. So I think for the first-time home buyer, there's going to be some challenges going into the market. But then as well, on the other side, that's great for fix and flips. Hey, if you're fixing and flipping houses, like we do on the lower end, whereas that we try to, our sweet spot, we like to have our after repair value be somewhere about 20% of the median sales price in our area, or 20% below that value. Just whereas that we have more than enough demand, because guess what? There's plenty of people in the market that can afford a $230,000 house compared to people that can afford a $600,000 house. So there's a lot more potential for demand to get those assets sold, where they're not sitting on the market like a $1 million house in Birmingham, Alabama. If you had $1 million home right now, it may be sitting for a long time, just because there's not a lot of high net worth individuals that can afford that $1 million home, and then especially at a 7% interest rate. So the house is going to sit a little bit longer. But that's one of the things that we've been seeing, that you just got to get in the market. And so I think as a real estate investor right now, you got to figure out where you are. I use the term that I'm being patient, but we're aggressively patient. We're doing deals. We closed a couple of weeks on a fix and flip property. We were thinking about adding it to the portfolio, but I think it makes sense to just go ahead and sell it, especially with the low demand, because we're working with different homeowners that's looking for houses and they can't find inventory. And so it's a great opportunity to give somebody a starter home that's looking to get into a home, start building wealth through real estate.